We will be today meeting for the third edition of our monthly member meetup. We have multiple guests, honored guests, which are joining us today, which will present the respective, they will take their respective sessions on various topics. We also have a couple of, I would say, invitees, which are non-members, who might be curious about our community and who also are invited to basically see the operations at our side and how our community is operating and how we are interacting. So this time, in third edition of monthly member meetup, we have a following agenda. Next slide, please, Poonam. Next slide, please, Poonam. Thank you. So as you can see, general summary. So in the main part, the first session, we will request Kripa from KruxStudio to talk about the concept designing for a new world of mobility. Then the second session, PICO from Pan IAM Consulting Organization. Hamanta and Swarup will be presenting regarding investment landscape of EV companies. Then we will take a break between 4 to 4:30 p.m. We will also allow certain synergetic discussions between various participants if some of them are interested. And then start at the second session to be taken by Mr. Amitabh Vaidya regarding EV manufacturing, prototyping to serial production.
Hello, everyone. So how do we begin? So let me start by giving a small disclaimer. We have made the assumption that everybody in this group is a relatively young startup looking to raise investments. So if we have ended up oversimplifying this, do pardon us. It is deliberate. We have oversimplified it for the simple reason that we want to get through to everybody. And if you find it way too simple for your liking, do give us a snooze for about 5 minutes. We will come up to your level very soon. So I'm just about to share my screen. Right, so that's the plan. All right. So how many of you watch Shark Tank? Anyone do? Awesome. So what do you like about Shark Tank?
Arrogance.
Sorry?
Arrogance.
Okay. All right. What else? What's the plot? What's the plot of the story? Right? So we have certain companies which have come up with products. This could be in any field. They walk up to a group of sharks and they try to sell their company. Right? Why are they selling their company? Or they're not selling their company completely. They're selling a part of their company in exchange for capital. Okay. Capital is one of the 4 factors of production: land, labor, capital, organization, right? If you remember basic economics, right? And that capital is used to take your company to the next level, right? You make money, investor makes money, all of you are happy. So in today's session, right, we want you to know about sharks, okay? What are they looking for? What is the kind of blood they want to taste, okay? And we're also going to talk about some storytelling techniques, how you get your story across. Next, we're also going to cover a little bit about pitch deck making. How do you entice the shark, all right? And we are going to end this with deal structuring. How do you structure deals? What does the investment process actually look like? Now, the first trait of a good story is that it is relevant for the audience it is intended for. Now, to give you an example, I love Chinese food. I spent a lot of my, my career in Southeast Asia, and I just love Chinese food. Now, today, even if you get Sanjeev Kapoor or, the late Jigs Kalra to personally prepare the best butter chicken for me, I will still be disappointed with the dish because I want to eat Chinese food, right? If you go to a movie expecting to see a fantastic horror film and you end up watching the best comedy ever made, you will still feel unsatisfied, right? The same is the case with a good story, all right? A pitch exactly is the same. What I'm trying to say is, if you have, your story, or you've worked very hard on your company, and you know of a particular investor. Now, don't send an investor something he doesn't want if it does not fit his investment mandate, if it does not fit his investment strategy. You're squandering not only his time, but also your own. For whatever reason, would you be interested in sending an EV pitch deck to an investor who does not invest in EV companies? He only invests in agri-tech companies. It's a waste of your time. It's a waste of his time, right? Second thing about a good story, it needs to be brief. We say brevity is the soul of wit, right? So you take a very good Hollywood movie, let's say Terminator 2, and you can compare it with the Bollywood version of a similar movie, right? The Bollywood movie is going to have a lot of freebies. You're going to have, the hero's sister's husband gets murdered. There'll be an unnecessary ex-girlfriend. There'll be item numbers. There'll be, communication with God in public. There'll be lots and lots of extra freebies, right? So what does that tell you? You forward all the songs, right? You forward all the unnecessary stuff. So it's trash, right? So you remember the good, the bad, and the ugly. If you got to shoot, don't talk, right? Even in a pitch deck, right? Investors have very little time to give you. And if he's given you the opportunity to showcase your deck, do not be meandering. It doesn't reflect greatly on a founder who wants to build the next unicorn. Third characteristic is observation, all right? What are the most recent trends in the market? So if you notice movies also, right? By watching a movie, you could make out what era the movie was made in. If you watch the old Hollywood movies, if the American Indians, if the indigenous Indians are the villains, you know what era it is made in. If the Japanese are the villains, you know which era it is made in. If the Arab world is the villain, you know which area it was made in, right? Which time it was for. So every movie is contextually and it's relevant in terms of time as well. It also captures what customers are looking for, So you'll also need to observe what kind of feelings are most likely to be resonant with your intended audience. Innovative work and professional success can be yours only when you have a thorough comprehension of the subject matter. For a startup to succeed, it must be relevant to its target audience. If you know your customers and market well, your pitch deck should reflect it. In fact, a pitch deck is a very subtle way of showing off your knowledge on the topic, right? So lastly, knowledge, right? There is no replacement for knowledge. A well-written story has a well-developed plot, and that plot needs to be as realistic as possible. Many hours of research and consultation with specialists in the field are required. Take the case of James Cameron, Terminator, Avatar, Titanic. Now, isn't it amazing how much time, work, and effort went into creating of, let's say, the Titanic? How well thought out the film was in general? How much of that film was based on, the real Titanic? Now, it was the story of, a Jack and a Rose and their love story using the sinking of the Titanic as a backdrop. Now, the story actually comes to life with the power of observation. If you've seen the documentary on how James Cameron made the Titanic, you will know. If you aspire to be a billionaire, you must have a very solid understanding and knowledge of the actual world. Now, I'd like to come to what you need to know about investors. Now, that will help you plan your message to the investors very well. Now, investors are professional people. They are in the business of making money with money. All right. So the group here is a group of EV companies. You make products to sell to the customer, and then and you make money and you make profits, right? Where does the investor make his profits? He invests the money into companies and he gets his return when he exits the business. So he's a thorough cut guy. He knows his business well, right? He is here to assess whether your company is going to give him the returns that he's looking for. That is exactly what he's evaluating, right? And you must also understand the fact that investment in startups is the riskiest asset class one can engage in. So how many of you think investing in stock market is risky? Risky proposition, which is why people prefer mutual funds, people prefer FDs, right? Now look at it this way. Consider this into perspective. Let's put this into perspective. A stock exchange has companies which are listed, right? An investor in the stock market is putting money into a company with the hope of the dividends he's going to get from the profits he make, right? So when an investor, so the guy we call investor, is investing in a startup, what is his guarantee of success? Now, these guarantees, most of these startups do not even have a product. They don't have too much of sales, right? So what is going to motivate him to invest in that particular company? If stock market is risky, I mean, investing in startups is way riskier. Third, he is responsible to his LP. All right. So obviously there is an angel investor who invests his own money, but large number of firms, they get their money from ultra high net worth individuals, different funds, and they are expecting the investor to give them a certain percentage in returns. So is your company the startup which he can bank on to give him that kind of returns? So that is how he's evaluating you. Also, an investor is a guy, I'm just calling him an investor. I'm angel, VC. I'm not making a distinction at this point in time. All right. So he listens to pitches every day. He does this for a living, right? So what you send him must at least conform to a certain minimum criteria, right? It's good to have a good story. Many people think that, putting fancy graphics and you using fancy jargon, the MBA-giri stuff is going to, impress an investor. On the contrary, it is just plain simple common sense, which is going to impress an investor. Next thing you know about an investor is, he knows that not all companies are going to succeed. So he has already planned for it, right? So he knows for a fact that 6-7 of his investments are going down the drain. They're not going to make him any money. 1 or 2 of them are going to be kind of so-so, but that one investment he makes in this particular company is going to more than offset the losses he's going to make in the others. And lastly, he is really hoping that it's your company that can be the vehicle that is going to be his lottery ticket, right? Bad word to use for him, but my investor friends will kill me. But he's really hoping that you could be his lottery ticket. Let us come to what investors want, right? What do they really want to know? Now, there are many more cliches and misunderstandings surrounding business plans, than any part of the capital raising process. And contrary to popular belief, no investor hears a presentation or reads a plan and then writes a check on the spot. I mean, Shark Tank, I don't know how that happens, but unless you go to Shark Tank, I haven't been to Shark Tank, so I won't really know. But most of the companies we've raised investment for, it doesn't happen like that. All right. A business plan is only a lever. If the plan is favorably received, the investor will move to the next phase of the funding process, that is due diligence. So this is only a trailer. The actual movie happens in the due diligence. So what investors want to see in your plan? So number one, he wants to see what is unique about your venture. Now, it does not mean that the investor is looking for a totally unique product, but what he's looking for is one with growth potential that sets it apart from the other industry competitors or from the other business plans. What sets you apart? Now, think about the transitive value that your venture offers to your potential customers. Also think about the uniqueness in the context of a blue ocean strategy. Second, what does the company do? Now, the reader wants to be able to understand the company's products and services and also the operations of the company. Now, you need to refine your elevator pitch into a clear, concise statement explaining your business model. If you can't explain what you're doing in 1 or 2 lines, I am pretty sure you have no clue what you're doing. No, people like us, like the MBA types, very much like lawyers. We don't like simple stuff. We tend to complicate things a lot. We tend to use jargon a lot, right? Does not work that way, right? Bad lawyers will use complex language. The good lawyers are all after clarity. So MBA guys are also the same, right? All the investors are also the same, right? Jargon, complex language, it really does not impress an investor. Third, how is the company going to attain profitability? Now, this area entails discussion of the market and the competition. And it also includes an analysis of areas such as revenue and profit margins. Now, make sure you have a very well-defined revenue model, and you need to have a table of assumptions, that form the foundation of the revenue model. Next, what benefit will be derived from a capital infusion? Now, as I said, infusion of capital, he's just putting in some factors of production. The actual profits are going to still come from the customer, right? How he wants to know how are the proceeds of the financing, how is it going to be utilized, and what results benefiting the investor are going to be achieved. Now, obviously, it should translate into increased revenues, increased profits, and an excellent return on investment. You can use tools like sensitivity analysis and stuff to provide a range of likely outcomes. Next, he is looking at, do the financial projections make sense? Now, a lot of us are over optimistic, right? A lot of people say, okay, fine, this market is 5,000 crores. This
6161.
Sorry. Okay, I guess that was a distraction. So a lot of us are over enthusiastic in our projections, okay, and over enthusiastic in our judgment. We see the world through rose-tinted glasses. It's okay if projections are aggressive, but it must be within the realm of reality. If you're making projections, obviously projections are made with the help of assumptions. You should have all the necessary information ready in the appendix to support the basis of your financial projections. Again, table of assumptions, very important. Now the investor again will want to see, is the management capable of implementing the plan? Sure, it could be a fantastic business model. You could engage PICO to build your business model for you, but at the end of the day, he is not making money. He's not making money off PICO. He's making money off the founder, right? He's always betting on the founder. Many investors consider this to be the most important element in a business plan, right? An investor must be comfortable with the experience, the knowledge, the abilities of the management team. Many a times, if your management is outstanding, the team can overcome any business plan deficiencies. So it is the person he's investing in. Always remember, the professional investor is the jockey, he's not the horse. All right. And lastly, is there an exit strategy for the investor? So does the business have the potential to merge, to be acquired, to go public, or buy out the investor, right? This is important, since the most popular venture capital vehicle is the convertible debenture, right? Swaroop will talk a little bit more about this in a later part of the session. The investor must be confident that either the debt payments can be sustained or that their stock conversion rights will have home run potential. You must be able to support the likelihood of that whatever exit strategy you select, it must be realistic. No matter what you use, it is still those 8 building blocks. What I have tried to do here is map the Sequoia format with these 8 building blocks of your story. You could take any other investor's template and map it here. You will still get these same building blocks, right? So let us come to it one by one, right? Why are you doing this? This is your existential question, right? Are you doing it because, of some burning passion? Are you very passionate about solving a particular problem? Or are you doing it because it's just a cool thing to do, right? So this is your fundamental existential question. You need to answer it in a single declarative sentence. It is actually the toughest part to do in a pitch deck. I mean, business model and all, everybody knows, right? But purpose is something which is very abstract and very hard to do. right? So to write that one line, I don't know how many lines you'll end up writing, but this is fundamental. This is important. This justifies your existence in this world, right? The second part is, what is the problem that you're solving? At the end of the day, a customer only pays you money to solve a problem, or if you're meeting a particular need for the customer, only then the customer is willing to pay you, right? That is the only way you can earn any money from any customer, right? So a pitch deck here will talk about the problem, the solution, and why now. All right. The best companies will always have a clear why now statement. In fact, a lot of time is actually spent on the why now statement. I mean, there was a research conducted by one of the document processing companies, and they make a lot of pitch decks. And more than half the investors invested in companies which have a very strong why now slide. I'll give you an example. All right. So let's say that I discover, a very fancy way to grow hair on the top of my head. Not going to happen, right? Using mango peels. All right. This wild example. Now, the question I need to do is, why have people not been using mango peels to grow hair on their heads, right? You need to have a very strong scientific answer for that. Otherwise, it's just going to be mumbo jumbo. It's not going to have any weight. Next, is it a $1 billion idea? Flashback to what the investor wants. He is looking for that one company which is going to offset his losses in the others, right? If you're going to be a $1 million business, chances are that he's not so excited. If you're going to be a $1 billion company, he will be excited. Now, I'm not talking about EV investors in particular. This could be, this is just anyone, right? One of the reasons why EdTech, FinTech, they're all booming, you'll know, right? It could be $1 billion with the way things are changing due to COVID. EdTech, FinTech investments have gone up significantly. This is one of the main reasons. The probability of EdTech and FinTechs becoming $1 billion companies are very different at this point in time, right? Next is, are you alone or there are others doing it, right? Are you the guy who's come up with something so unique that nobody else is doing it? Or are you competing for space with 4 or 5 or 10 people who are trying to solve the problem? Assuming that the investor knows the industry well, assuming that you have a lot of startups pitch to the investor for investment in the same space, you could be rest assured that he's going to know that there is competition more than you. So if you can tell him that, you also know of, if you can prove to him that your research is better than his, he's going to be impressed. All right. Next is, how will you do it? That's your business model. That is how you are adding value, right? How are you going to execute the problem solving? And this is pretty much self-explanatory and simplistic. Do you have the capacity or the capability to do it? This explains, this is your team slide, all right? In order to run a successful business, you need all sorts, right? You cannot just have an engineer. You cannot just have a marketer. You cannot just have a finance guy. You need to have the entire right set of skill sets. You need to have a strong team. So you need to talk about why so if you are building a technology product and you don't have a tech guy in your team, you need to have a very strong explanation why you don't have a tech guy in your team, right? A founder, an idea founder fit becomes very important. Let's say that I've been a top executive in a Paytm and I want to create an edtech startup. That's not a very strong founder fit. Of course, there are criteria which negate the need of a very strong team in a particular sector. But look at it in terms of skill sets. Ideally, if you have a particular problem to solve, you must have at least the right set of skills in the team to solve it. Next, how much money do you need? This is the reason why you actually reached out to the investor, right? If you have any financials, please include them. If you're already having some traction, if you're already having some sales, definitely include it. And finally, it's your vision. If all goes well, what would you have built in 5 years? Now, these are the basic building blocks that you use to communicate with an investor, and does not matter what slide you use, does not matter what format you use. Everything, every pitch deck could be mapped into these 8 questions that an investor would want to know from you. Now, what happens in the investment process? And for this, I will hand this over to Swaroop, and Swaroop is going to talk to you more about what happens in an investment process. All right, over to Swaroop.
Yeah, thanks, Hemanta, for giving that wonderful overview as to what the investment process. I mean, what's the investment, what investors look for, how to create your deck, what's the overall theory. Yeah, so Hemanta, of course, talked about whatever the know about your shark bait, the deal structuring is what I am going to talk about. Yeah, but before going to deal structuring, I just wanted to give a quick snapshot. While most of you will likely be aware, because Micelio itself is trying to build this entire EV ecosystem. So there's a massive investor interest in the EV ecosystem. So pretty much, I mean, of course, these are just some example deals which have happened in the market. Ola Electric raising whatever 750, they are becoming from nowhere. I mean, of course, they were a cap company, but they have come to become targeting to become one of the largest EV players, not just in India, probably globally as well. Yeah, TVS is investing in a 1,000 crore facility. Yeah, I mean, of course, every large player, Tata Motors, Hyundai, everybody is trying to get into it. Not just large players. In every nook and corner, you'll find small startups. I mean, there's a lot of discussion and activity in the group that we follow on a daily basis. Whether it is charging, whether it is wires, whether it is ports, whether it is just apps for finding a charging station. Yeah, leasing services. You name it, and you'll have some kind of a startup, and not just a startup, but an investment. There are angels active, there are mainstream investors active, there are international investors active in this space. And just tying up to what Kripa had just presented, like the whole thing, the one big difference that you'll see in auto industry versus the electric vehicle industry is that in auto industry, you'll not find too many new players, like maybe like in 10, 15, not even 10, 15, like in a couple of decades, one new company. Yeah, even that's like a very, very optimistic thing. For that matter, in US, Tesla is from an American economy, Tesla is the only auto company which has come up. Forget electric, this thing, the only auto company which has come up after Ford. Yeah, of a scale. They'll of course have some niche players, some design companies. Yeah, and what you're seeing in EV is that the interesting phenomena that you have to observe, which was exactly the message that I was getting from the previous presentation, that in pretty much 100, I would say, is probably still a lower number. So you are saying 100 companies. Maybe we are going to see 10,000 companies. And when you say that, okay, no, 10,000, like somebody is just throwing a wild number. No, I'm not throwing a wild number. Right now in China, roughly 20% of the market, 20% of the auto market in the two-wheeler segment is in electric vehicles. If you're a slightly larger company, so what you or if you have a banker in between, yeah, some advisor or banker in between, so there might be a stage that instead of sending the entire presentation, you might be sending a small teaser, yeah, just like a 2-page or 3-page or something, just to check. Because what happens is that it's not like there is any intent to hide information or go into any kind of bureaucracy. As simple as this, investors don't have time to go through your 10 slides or 20 slides, whatever you've made. They want to check in 2 slides and make a quick decision. And see, and the investors are not really, I mean, in the business of just talking, and because they are seeing 100 presentations a week. Yeah, so 2-slide or 3-slide teaser is what we call, like a snapshot is what you give to the investor. If he says that, okay, I like this, you get into some kind of a non-disclosure agreement. Yeah, and this is like something, sometimes you just shortcut this. For small companies, a lot of investors will say, no, we don't want any non-disclosure. If you want to talk to us, you send the presentation. Yeah, and have faith. Normally, I mean, no investor would really just share your presentation or at least the confidential information. Yeah, and there'll be, but yeah, sometimes it might be there. I mean, investors themselves might say that we want to get into an NDA. Yeah, so no need to really imagine why and how. If there's an NDA stage, have an NDA, have something ready, 2 or 3 page, Very simple. There are lots of templates. Micelio will be able to help. We will be able to send you some templates. Just get into the NDA, send the pitch document. Yeah, pitch is what we just discussed, like 10, 12, 15, whatever number of slides that you have. They get the internal buy-in. They have now in principle handshake. In principle handshake is like, okay, we want to evaluate. We want to get into this due diligence process. Yeah, we want to evaluate. Now it means nothing. It just means that nothing means it means a lot. It just means that we want to evaluate. We have some questions. Yeah, we like this sector. We like the company. We like the team, but we want to evaluate a lot of other things in depth. If everything is found well, then we will make the investment. Yeah, when somebody gets into a term sheet stage, the intent is to invest. The intent is not. See, that's why I'm saying in principle handshake. It's an important step. The intent, the investor said, I want to invest, provided there's no screw up in the company. Whatever I'm imagining, whatever you have told, everything is there. We'll just verify all of that, and we will verify means and nobody's verifying anything that you are. Nobody's verifying whether you have lied or not lied. The assumptions, what will be the verification? The assumptions are going to be verified. Yeah, and it's not like investors are always aware of everything. I mean, frankly speaking, they're not aware. Otherwise, they would have done the being entrepreneur. They're saying that we are not aware. You are the executor. You are saying that, okay, you will make chargers. So many chargers are going to sell. Yeah, you are saying that I'm going to make chargers for say E3 wheelers, and these chargers are going to sell like hotcakes in so and so geography. Investor said, okay, I believe you've shown me the numbers, but I also want to verify that what are these three-wheelers? What are the customers saying? Are you really understanding? Maybe there's some mistake that the way you've understood the customer. So all those things they want to verify. Yeah, you are saying that electricity is very, very cheap, and government is trying to make some schemes to open up electricity at cheap rates. But is the local government really that serious about its assumptions, about its plans? So all those things investors would want to verify. So that's what now what happens is that after a handshake, they say that handshake means what? They will sign a term sheet. So term sheet, okay, let me take a pause. Has anybody signed any kind of term sheet with any investor in angel or friends and family? Anybody has, you can just raise a hand or drop a message that yes, if anybody has signed a term sheet. No. So I'm assuming no problem. So yeah, so term sheet is what? Term sheet is basically broad terms and conditions. Yeah, broad means like it will be say a 3 or 4 page. What's the type of money that investor wants to put in? What's stake? Yeah, what's going to be the some kind of like, we'll come to some specific thing, liquidity preference, like what kind of returns investor is going to get, what kind of instruments he might be putting in, but like a broad level thing. Yeah. Now of course that term sheet is not full details of all the agreement. There are going to be lots of things that we are going to decide when the final deal happens, but term sheet is like setting the broad parameters. Yeah, it's like you can say that when you are having a marriage. Yeah, whether it's a love marriage or an arranged marriage, the two families will gather. There's going to be a mega function. Yeah, but they will have to agree that, okay, this is what is going to be the broad layout of the thing, and they agree to some kind of thing. That's the venue. This is how it is going to happen. But lot of final details are going to happen in the later stages. Yeah. So term sheet is what you sign. I mean, we will not be going through the specific. I'm not sharing templates or all that we will share when with Micelio, and they will circulate some templates or something. Yeah, but what I want to say is that term sheet, now it is important. Why? What's the difference between like how you can make things work for you is that, see, at the term sheet stage, both the parties do not know much about the final stages, as to the final chinks which you want to iron out. The more you are aware about what will go into the final stages, you can very well put into the term sheet. In fact, the more sophisticated, the more sophisticated entrepreneurs. Yeah, I'm saying entrepreneurs, not investors, because investors are sophisticated. By and large, investor knows. Now, this is the thing. Of course, in any deal, no deal is like that everything is hunky-dory. Like there'll always be some conflict. There'll be some things that investors want. Everybody is there to make money. Yeah. So investors are normally clear as to what will come from the term sheet into the final stages. and no point of trying to append them. They are the masters in that game. They are doing it day in and day out. But the more you know about what might come in the end stages, the better it is that you can load all of that. You can put all of that. If you want, you can very well put the entire agreement. If you are clear as to what might happen in the final stage, you can put the entire agreement. Investor will not say no. He'll be happy. Investor is also happy to deal with a sophisticated guy. Let's not waste time. If the entrepreneur is aware what is the meaning of a right of first refusal, right of first offer, let's sort it out. But there's no point of wasting 1 month on that term sheet. That's a 1 month process. But if you are aware, it's very good. In 2 days you can sort it out. Term sheet, we want these conditions, so let's put it. Yeah, so always more is the awareness that you have of various terms and conditions, whether it not just of the term sheet but of the end agreement. Term sheet is a high level. It's like a small format of the end agreement. If you want, ideally you can put up the entire end agreement in this, so that works for the investor. But yeah, it will have to be done in 2 days. It cannot go for 1 month. That's the thing. In 2 days, how many terms and conditions you can put? Investor is capable of putting the entire agreement. Are you capable of putting the entire agreement? Normally no, but yeah, the more you put it, the more you can think through, the better it is. Okay, let me ask this, that has anybody raised or given money, like how business happens in a traditional thing, like you want to set up a shop, yeah, say whatever shop you want to set up, a clothes shop, you want to raise some money from some friends and family. So if you give some money, typically what are the terms and conditions? What do they say? If you take money from your uncle, saying that, okay, uncle, I want to start a taxi renting business. So is it a stake that the person takes, or he says that I'm giving the money to you, give me some interest, and that's it. Whether you buy taxi, whether you set up a grocery shop, that's your business, but give me my interest and principal back. I'm sure like somebody has pro rata investment rights, of course. Yeah, that is pro rata investment rights. That is that's the point. Like say 10%. That'll be more like slightly non-commercial category. We'll come to that. But I want to specifically, I want all of you to understand one thing very clearly: is promote structure, liquidity preference. What I want to say is that there are two kinds of investment that all of you have come across in your life. Number one, you take money, 100 rupees from somebody. That guy says, you take the money, do whatever, you drink and spend it in pubs, or you set up a business, I don't care. You take 100 rupees. After 1 year or after 2 years, you give me the money back with 20% interest or whatever interest. That is something which is like the bank's way. Yeah, I mean, banks will of course take a security mortgage, but your friends and family or investors will say that take and give the money back with so much interest that everybody is aware of. The second thing, which is again, yeah, right, in case of liquidation, correct, that is also slightly non-commercial, like something in between. But the important concept, the bank lending or anybody lends money, that's one type. And the second is that you give some money and you get some stake in the company, which is how in stock markets people might have invested. You invest whatever and you get a little bit of the share of the company. So these are the two standard ways how investment has been made forever in the entire world, in the entire history. That's how the investments have been made. Now what happens is that in between, in reality, in the venture capital institutional world, investments are a hybrid of these two. It is neither a debt nor a direct stake in the company. But by the time the company is mature, it is going for an IPO and exit and acquisition. Then of course it becomes like a pure equity investment. But initially you will find, and this is particularly for early stage companies, this is you are likely to face this. If you are dealing with a sophisticated investor, he will say that you take the money and I'm not sure as to what this valuation is going to be. God knows. I mean, you don't even have revenue tomorrow. God knows, and your company will succeed only if a big guy comes in, say a Sequoia or Micelio itself might just invest, a big amount. So we do not know what that valuation is. We want to. It's good. Let's have a different kind of a thing, that you take the money. You think that it's going to become $1 billion company. You keep your $1 billion. I don't care. You give me say 20% of my interest back, and beyond 20%, whatever the company makes, you give me a share of that. You keep the majority. because I've already taken 20% like a bank. I've been very mean to you as an investor. You give me my 20%. On the rest of the money, whatever we make by selling the company, you give me say 20% and you keep the 80%. Yeah, that number can be anything. But this is the classic promote structure. Yeah, promote structure is the name. Promote structure was what was always used in the private equity world, in the venture capital world, in the tech ecosystem. What you will see, instead of promote structure, the more common thing is the liquidity preference. But be aware of these two. Liquidity preference, they will say that, okay, whatever it is, you take my 100 rupees. Whenever the company does good or bad, I don't care. I want at least my 100 or say my 150. It could be one time, it could be 1.5 times, 2 times, 3 times. It's all a matter of negotiation. Nothing. There's no rule. Yeah, it's how well you can negotiate. In fact, if you look at it, there was a phase like in 4 or 5 years back. A lot of companies, a lot of startups went into hyper valuation. Investors said that, okay, you want valuation, take it. You want to tell to the world that you are a billionaire or whatever, millionaire, whatever, take it. But you are not taking home any money. You take your salary, of course. But when the company exits, if the company is not able to make great money, I am going to take say 3 times of my money. So that's finally what happened. You, of course, got a lot of media coverage, press coverage, a lot of glamour, but at the end of it, it's not a good deal. If investor says 2 years down the line, he will take 3 times. Yeah, investor makes a lot of money, but what did you make? You didn't make money. Yeah, so be aware, like too much of liquidity preference to the investor is not good. Ideal case, you do not even want to give a liquidity preference, but that's again, it all depends on your how well do you have the kind of negotiating terms. The other next point, valuation based on discount to next round. Yeah, which is something, again, this is going to happen very, very commonly. Yeah, this is like this has been made very popular by the Y Combinator model. SAFE, simple equity. I mean, we'll come to that SAFE later. But they're saying, investors say that we cannot decide the valuation. I'm putting in 10 crores. Your company, if it has to succeed, your plan is such that unless you raise 100 crores, no, I mean, you are anywhere doomed. Nothing can happen. I'm going to give you 10 crores. Use it to build whatever you want to build and raise that 100 crores. And when you raise that 100 crores, whatever valuation that next investor comes in, you give me as per that valuation, but some advantage, because I came in early, right? I have to get some advantage. If I get after 10 crores, if the next guy 2 years down the line, he comes in and whatever valuation, I get the same valuation. What did I get? I did not get anything extra. So he said, I will get to take some discount. So which is like say 20%, 25%. Yeah. The American investors, I mean, the American and the investors who are directly coming from the international market, they are much more used to this kind of, even the angels. Yeah. Institutionals, of course, they are used to, I mean, people like Micelio, and whether it is Indian institutional, American, or anywhere, Singapore, even a Sri Lankan institutional investor, they will be fully aware of this. As far as the angels and the smaller investors are concerned, the developed market investors are fairly aware of this kind of comfortable with this kind of a structure. You can reason out with them. Indian angels will be normally not so willing to give this discount kind of a thing.
I think we should have arranged a separate session altogether, for people, because there's so many things and so much of information which all our founders would have basically, appreciated to know and deploy at their various businesses they're running. And anyways, I'm happy to basically inform all of our members that PICO is one of our registered consultant with us. So obviously, for all our members, for certain degree of support that can be extended in building the initial setup directions around fundraise. So all your basic queries can be always addressed. And we can anyways connect PICO with all of you who would like to have private projects to be explored. And obviously, the objective of this session was to spread awareness about fundraise and also help all of you to know PICO. And in case you have interest to engage with them, you can directly engage too. That is, also PICO has been very kind to basically structure their pricing. They are structuring their pricing for the community. And they have been very supportive in multiple ways. It is not typical of many of the financial agencies out there. Thanks, Swaroop and Hamanta. It was a great presentation from your side. Now, what we will do next is to take a minute, I would say a break, say 5 minutes. We will get back again.
I'd like to ask others if they have that feeling as well regarding investment. It kind of felt during the presentation that it's like, you know, water everywhere, not a drop to drink.
I will actually agree with you. You know, the total amount of capital in this world is way more than what people really need. However, the people who need it, they have to work very hard to get it. Some people don't get it, and that's the harsh reality of this world, right? So you are absolutely right. Water everywhere, not a drop to drink. However, there is a method to the madness. You can only increase your probability of success in raising investment by following some sort of a scientific path to it.
Yes. See, as we all know, there are various types of investors, which Hamanta team has also explained. Now, every industry has, I would say, a starting point after which investment or raising investments is lesser of a problem, and you have to reach to that level first. And the first investment itself is a tricky part, right? So that's exactly what Micelio's Discovery Studio is trying to catalyze as far as the success rate of your product. So in the research and development stage, when all of you who are startups who are figuring out how we can make them market ready, so faster you make it, the lesser you spend your money on, the better your propositions will be to raise money and to entice investors that you are credible, you are professional, and you already know what to do. And so moving forward in future with the PICO with us, we will see how we can create, like there are many other startups, like in previous monthly member meetup, Arnab has also shared that how can we jointly create some form of cooperative initiative where the startups, we can pull in their resources and further reduce their ask for investment. And there are plenty of things which can be done. And as an industry, we have to figure this out ourselves and then convince investors to use our community, our platform, as a way to de-risk their approach instead of right now the religious part which they end up doing themselves. And many of the investing entities do not have internal teams also. There's a lot of inefficiencies everywhere. And what you have identified is true, that the first investment itself is the most hardest thing. Or for any startup, first sales is hardest thing. Once you make the first sales, then you see like, okay, we are somewhere, we can now create some kind of, we have initiated, now we can create some form of sales funnel. So that initial raising fund is something which is the tricky part here, and that's what we have to work upon. And continuously there are multiple entities which are working in the direction. Some are grant based, some are focus on micro crowdfunding platforms. There are a number of approaches and models through which this particular dilemma can be addressed.
Okay, now this also calls for a little bit of introspection, right? Why are you unable to make the first sale? Why is it so difficult to make the first sale? Number one, there are not significant mass of people who have already tried your product. You have not spread your message to so many customers because you have a deficit in your advertising budget, right? Once you overcome those hurdles, your probability of success becomes better and better, right? And your sales increases. Likewise, for an investor, there's a term that we use called the valley of death. All right. So you can Google it and you'll get it. That's basically the probability of success of any new venture. Now, if you're typically in an ideation stage, if you're working on building a product, most of the companies do not get past that stage. Most of the companies do not even get to the traction stage. You call it the valley of death. You're only burning money, and the probability of success is not very high, right? So, but then there comes a point where that curve kind of actually inflexes, right? Then it starts going up. You're still burning money, but now this is the point where the graph is going up. and there comes a point where you cross the 0 point. Now, coming back to our discussion, that an investor is a guy who invests money to make money, right? Why should he invest in the valley of death, right? So nobody is going to fund research and development. There are other ways of, funding research, funding development, and there are incubators, there are grants, there is government support. Those are the kind of instruments you are supposed to use when you are in the ideation phase, right? I mean, I know enough people who go incubator after incubator. They may not end up being serial entrepreneurs, but they definitely end up being serial incubators, right? So they go incubator after incubator, wherever there is a grant, wherever there is some sort of fund, they go. A lot of people take part in various contests. The prize money, that is what they use to fund their operations. I know a guy who works for who has a startup. He only takes part in competitions. He wins competitions to earn money for product development. We have government grants. So depending on which state you are in, every state has a startup policy. Almost every state has a startup policy. Almost every state has got different grants, right? There will be lots of universities near you, and universities and educational institutes, to drive the entrepreneurship mandate. They spin off a not-for-profit company or a society. So my previous organization, I was heading in investments for IIM Calcutta. So IIM Calcutta runs this Section 8 or not-for-profit company called IIM Calcutta Innovation Park. IIM Bangalore runs NSR Cell. IIM Ahmedabad runs CIIE. IIT Bombay runs Sign. So different incubators have different schemes, different grants, different opportunities. You need to create a software product. They'll give you 3.5-4 lakh rupees worth of Amazon credits. They'll give you access to set up your entire office on Zoho, right? All that. There are lots of freebies that different incubators give you. So use the knowledge. You search different incubators. We'll also try and compile a list of all the incubators and what are the companies that they support. I believe that it's freely available information. I think I read that list.
Amitabh, I will request Amitabh to maybe basically turn on the camera and introduce yourself to the rest of the audience, and proceed towards the presentation. You're on mute, Amitabh.
I have put the video on. Am I visible now?
Yes.
Okay. So just I have some bandwidth issues. So now that people have seen me, I'll just wave, and then if you don't mind, we'll put the video off.
No problem.
So hi everybody. Okay. So yes, probably the youngest of the lot in terms of my bald head, where I have no hair left, which is contributing to my wealth of experience. So just for the benefit of everybody, what I will do is I have a very concise and brief presentation. It has been a long day for everybody. So with this wealth and plethora of experience, and you have had sufficient inputs in the past almost couple of hours from PICO in context of the financing aspect and the affordable business structure aspect. In the product development domain in automotive, it is traditionally called the affordable business structure. But that affordable business structure predominantly revolves around an existing company trying to venture into a new product. Like I'll give an example of Scorpio. I was the program manager for Scorpio Powertrain in Mahindra & Mahindra when Pawan Goenka was heading that enterprise. And when Scorpio was launched, or rather when it was envisaged, it also had to undergo the affordable business structure exercise, which PICO has been trying to really coach and guide you guys in terms of your own affordable business structure with respect to your own startup. So when Anand Mahindra envisaged Scorpio as a path-breaking, groundbreaking product with Pawan's guidance, Well, yes, it was a startup within an existing giant, sort of, and it started with that affordable business structure. That's just a sideline input. So how do I operate normally? So right now I'm an independent consultant. I don't have an organization. I'm a single man army, but I'm an independent consultant and predominantly engaged in consulting services to high-tech companies like electric vehicles. One of them being the group company of Micelio itself. And me and Hiten are also envisaging whether I could be a sort of an empaneled consultant for Discovery Studio or otherwise where I could help you guys also. But that's very much on the cards. Nothing very specific or concrete about it right now, but just an input. And how do I operate in terms of my value framework is, well, yes, before I go there, I've also been consulting some of other high-tech companies which are into the courtesy once again, with some help from the team of Hite, which are in the field of high-tech field only, but very different field in terms of aerial unmanned vehicles, which we popularly, in layman's terms, we call them as drones, but they are also looking at the same aspect of design to manufacturing, concept to productionization, by whatever name you call it. Okay. So all of us are aware of what it really entails in terms of product development. It is concept, design and development. And now in terms of product development, what you see here is a traditional systems view. Okay. So the left, and there are three phases in any product development program. You define requirements, you design for the requirements, and then you verify the design. There is a framework called APQP, Advanced Product Quality Planning, which also essentially centers around the 5 phases of product development in any discrete manufacturing vertical. And it can be administered as a project management technique. Okay. And you see certain diamond points. These diamond points in a traditional automotive product development process are called as milestones. So before each milestone, there is a set of activities which you really need to complete. And once you do that, then that milestone is cleared. So KO means a kickoff gateway. So kickoff gateway, most of you are in the kickoff gateway when you are a startup. So you are scampering for funds. You have a product idea, you have the passion, you have the zeal and the enthusiasm. You are trying to, so in the PICO presentation, what problem are you solving? What is unique about it? All those aspects will come into this. And then you have certain other milestones. So terminology used is DR1, okay? That is the design readiness. So design readiness is a misnomer. It is not only related to design. You can call it, for sake of simplicity, you can call it gateway 1, gateway 2, gateway 3 also. And it is a top-down approach starting from the product, going to system, subsystem, up to component level. And so maybe the first 2 milestones could relate to the pre-kickoff activities, defining the product in terms of its strategic intent. The next, so there is a concept milestone, there is a design milestone, there is a development completion milestone, then there is an alpha proto build milestone, there is a beta proto build milestone, there is a pre-production milestone, and there is a production and ramp up milestone. That's how it goes. Worm's eye view, okay, these are the phases. So one is a preliminary information. Okay, in that you will, so outputs is all marketing research, problem resolution. So now this presumes that you already have a product. If you don't have a product, it will be all legwork that you do before you really start your product development. Next phase is plan and define program, where you have where you finalize the design goals, quality goals, the preliminary bill of material, the preliminary process flow charts, the product assurance plan, and what are the inputs and outputs. So market research business plan as inputs, design goals, quality goals, preliminary BOM as outputs. So what are the inputs and outputs? And then at each of these phases, you have a phase review, okay? And it has a name. Then you have the second phase. So it goes on that way. I will share this sheet. There is nothing, this is not rocket science, nor is it very highly classified data. All of you are better at technology deployment than me, because I am a bald-headed oldie. So I am Gen X compared to all of you. So you know the technology better. Kahin pe bhi milega aapko, but still I will share it with Hiten so that he can pass it on to you. All right. So this is what I had to share, guys. Any questions? You can, rather than chatting, please ask them directly and I can address them.
Sir, Amitabh, sir, this is Satish from Advantage.
Go ahead.
So can you cut short this entire new product development to suit the startup? Because these are generally followed in OEMs, which takes a lot of time in order to develop a product. But how you can scale down or create the same successful effect, how you created in Mahindra for a startup?
Correct. A very valid question. And this is what is generally the problem which is encountered. So for that, so all of you are aware of a concept of a minimum viable product, which anyways you would have done as startups. So after the minimum viable product, there are ways and means. Say, for example, the APQP framework, which I showed you, okay? In that, so if you just went through the Excel sheet listing, there are 50 odd elements. The APQP framework says that there are 8 focus elements, only 8, okay, less than 10, only 8 focus elements on which you can concentrate and accelerate your product development from a minimum viable product to a thoroughly ready product ready for launch. But the upscaling will once again depend on whatever I described about your make versus buy and what sort of manufacturing strategy you deploy. Understood? So to answer your question, yes, there are ways and means available to hasten it, to shorten it. Opportunity to thank you for this opportunity, and we can then discuss it further in terms of any other next steps we should envisage for your members. Okay, thank you, Hiten.
Sure. Thanks, Amitabh. Thanks for your time today. And really, the idea again is to introduce you to the community members, and also based on the presentation, I'm very sure that many of the members might be wondering how we can scale up of the processing professionalization, and obviously Micelio KruxStudio can play a role there to integrate the requirements of the company to the startups, and how you and others your network can help the startups. Thanks again, Amitabh.
Thank you, Ethan. Thank you. Thanks, guys.
Can do the screen right now?
Yes, you can see your screen, Napendra. Good evening.
Yeah, so basically, yes, Advantage is a design engineering services company. It is named after Advantage Design, where design makes technology more human. Like Ram Kripa is a senior designer, and I am actually a designer from National Institute of Design. My name is Satish, and I have a team of 45 people with various degrees and technologies inside our company. Basically, through design, you can make differentiator in the market. Our processes fail fast, succeed faster. So you heard it right. We fail in doing a lot of prototypes, and then we find out how we can succeed faster in the market. So we are a group of designers, tinkerers, engineers, and what we offer is design research. Customers comes to us like what product to be made. Everybody comes with like, I want to make Activa kind of product. I want to make a PICO kind of three-wheeler. So we will try to understand what customer really want to make and where is the industry is moving ahead. So those trend studies we do. And then we do automotive styling and surfacing. That is our core strength for electric vehicle design, this thing. And we have the tools to make world-class products like the Class A surfacing kind of. We generally are from automotive car design background. So we can build such a quality of products in India itself. In embedded electronics, basically, we are not full serviced embedded electronics. We basically tune the powertrain and then integrate it. But currently that particular aspect is fast evolving in our company. But we are a full mechanical engineering services company where we can do chassis design, BAW design, sheet metal design, plastics design, integration of suspension, steering systems, and make prototypes. And we also give on-site resources, even for companies like Ola. We have worked in the past on Euler currently. So all these companies require support on-site and offshore for fast product development and decision making. Basically, the opportunity, what all you guys are founders, you are looking right now, that needed to be come from you or a market research thoroughly done or a gap you have find out. So we will vet that, we analyze that, and we understand the feasibility. If there are any patents, we have a patent search team where we cannot let's say take a patent and go further. So all your investments will go wrong. So we will do a bypass, or we will actually make our own IP. And is it really needed? For example, many people come with a wish list. I want a flying mobile, right? We can launch. But if flying mobile is done, the good thing is it can shot good videos like a drone. But the bad thing is it is not allowed. You can do a surveillance on your neighbor. So there is a research which says that whether the product is a go, no go, even though it is really good of technology. That is why our design process makes technology human, whether it is really needed. And that leads to a strategy, and that leads to a decision. The decision, which is very important. Once you take a decision, you are going to put crores of rupees and a lot of time onto it, so you cannot go back. So this has to be funnel down approach. So we create products, idea to market through innovation, and the decision we will make along with the customer, or customer makes, and we'll give enough facts and figures to form that decision. After you make a decision, we help in planning, designing, form and shape, engineering. Like we have several faculties of engineering: electronics, mechanical, electronics, software. But electronics and software is still under development, and we have several, let's say, collaborations with several other companies for our customers. And the main thing is making prototypes, realize them and validate, so that it is production ready and manufacturing. We'll give you some examples for this process. This is a short introduction. My name is Satish, I already told, and we have Sachin Pawar, who is MS Aerospace, ex-Robert Bosch. Sanket Kutekar, our design and styling head. We have Upendra Paluri, who is ex-KPIT, he is from IISc. And Harsh, who is a project manager, basically he is into powertrain design and much more. Basically, we do industrial design, which is very important. You cannot copy right now, or you cannot carry out a Chinese product. So styling, Class A, CMF, UX, that is the differential. Even for funding, it is going to be very good if you are a very designed product. Mechanical engineering, this chassis, suspension, steering, BAW and plastics. This becomes the heart of the vehicle. And often integration, as you guys are so much expert in powertrain, we are actually integrating them to make prototypes, to test them. And our entire strength is in prototyping. We have a full functional 2 units. We have 3 offices in Pune. 2 are prototyping centers. 1 is the design office. And we also do some program management for startups, where we can do some sourcing and vendor development, because we are in this field for more than a decade. And design research, everybody says that, okay, I have done my research like that. But fundamentally, if you do a design research in depth, you will find gaps. And the more the user you observe, and the more the technology you absorb, you will get a very good product brief for yourself. And benchmarking also we do, so that we are not, automotive benchmark is a big subject, all OEMs do. For startups, we definitely do benchmarking in order to realize the bill of material, should costing, or let's say the development problems which comes. So this is the first way we actually filter that we are not going in wrong direction. And then this styling, like if you talk about styling, as you can see here, we are every day in and out. For every customer, the design is different, the engineering is different. So at a point of time, if we have 4 to 5 customers in bikes itself, the projects are totally different. So we create a lot of innovative concepts in this field. That is where we see that future ready products, all the startups can disrupt this market using design and engineering as their main ability. Well, engineering of, let's say, software, electronics, you are already doing. But if you want any help in this area, we are the right people. In 3-wheelers, we do a lot of work with a lot of customers. Some are successfully launched in the market also. And in 4-wheelers and electric buses, we are doing a couple of electric buses. with the customers, and four-wheelers with certain customers. So that is also going to launch very soon. As you see, earlier presenters, Amitabh ji, is a very good process they have defined. But what we can see is we understand that process. We have sized into packages that quickly get into the let's say product development and concept design through prototyping. So vehicle ergonomics becomes very important for one of the things, and class A surfaces. I hope I am not rushing because all you guys have patiently been there for so long. So I want to take less time. But here it is. If you have any question, please ask me. It can be a let's say very informal session like that. Class A surface is required when you see a BMW or when you see an Audi. You see the fit and finish that is slowly getting achieved in our Tata Mahindra also. That is because people are so tuned with this technical surfacing right now, and this is a must for any automotive company to grow further. We also do UI UX development. Basically, the app development is done by the customer. We do the UX part, UI design, as we are a designer company. So whether it is instrument panel cluster, whether it is a mobile app, that is what we develop for our customers. This is the core. Basically, why customers to come to us is experimenting with their powertrain. They have a battery, they have a motor, they have certain systems. We just integrate them. We make a quick proto for them, whether it's a three-wheeler, four-wheeler, bus, two-wheeler, all those prototypes we do. And basically, the product is visualized with engineering, and the customer get a very fast development from our side. And we test them also. We have several methods to achieve this. We are using low volume production techniques to create such a fast development cycles. We also have developed gearboxes for a 2 kilowatt motor. This is for a Denmark customer. If you have seen a trailing arm, instead of tooling it or doing a lot of work, we did laser cut press bend and test the suspension from the supplier first. And then the suspension and the entire system is working well. Then we have gone for a tooling of that trailing arm. So our methods are mostly made for quick prototyping and do the engineering through practical level. But however, once it is done, there is a process which Amitabh sir is saying that when you are very confident about product, you have to go through all the reliability studies. We have to do the BAW tooling analysis and then go for heavy investment. Basically, we do industrial design, which is very important. You cannot copy right now or you cannot carry out a Chinese product. So styling, class A, CMF, UX, that is the differential. Even for funding, it is going to be very good if you are a very designed product. Mechanical engineering, this chassis, suspension, steering, BAW and plastics. This becomes the heart of the vehicle. And often integration, as you guys are so much expert in powertrain, we are actually integrating them to make prototypes to test them. And our entire strength is in prototyping. We have a full functional 2 units. We have 3 offices in Pune. 2 are prototyping centers. 1 is the design office. And we also do some program management for startups where we can do some sourcing and vendor development because we are in this field for more than a decade. And design research, everybody says that, okay, I have done my research like that. But fundamentally, if you do a design research in depth, you will find gaps, and the more the user you observe and the more the technology you absorb, you will get a very good product brief for yourself. And benchmarking also we do so that we are not, automotive benchmark is a big subject, all OEMs do. For startups, we definitely do benchmarking in order to realize the bill of material, should costing, or let's say the development problems which comes. So this is the first way we actually filter that we are not going in wrong direction. And then this styling, like if you talk about styling, as you can see here, we are every day in and out. For every customer, the design is different, the engineering is different. So at a point of time, if we have 4 to 5 customers in bikes itself, the projects are totally different. So we create a lot of innovative concepts in this field. That is where we see that future ready products, all the startups can disrupt this market using design and engineering as their main ability. Well, engineering of, let's say, software, electronics, you are already doing. But if you want any help in this area, we are the right people. In 3-wheelers, we do a lot of work with a lot of customers. Some are successfully launched in the market also. And in 4-wheelers and electric buses, we are doing a couple of electric buses with the customers, and 4-wheelers with certain customers. So that is also going to launch very soon. As you see, earlier presenters, Amitabh ji, is a very good process they have defined. But what we can see is we understand that process. We have sized into packages that quickly get into the let's say product development and concept design through prototyping. So vehicle ergonomics becomes very important for one of the things, and Class A surfaces. I hope I am not rushing because all you guys have patiently been there for so long. So I want to take less time. But here it is, if you have any question, please ask me. It can be a, let's say, very informal session like that. Class A surface is required. When you see a BMW or when you see an Audi, you see the fit and finish. That is slowly getting achieved in our Tata Mahindra also. That is because people are so tuned with this technical surfacing right now. And this is a must for any automotive company to grow further. We also do UI UX development. Basically, the app development is done by the customer. We do the UX part, UI design, as we are a designer company. So whether it is instrument panel cluster, whether it is a mobile app, that is what we develop for our customers. This is the core. Basically, why customers to come to us is experimenting with their powertrain. They have a battery, they have a motor, they have certain systems. We just integrate them. We make a quick proto for them, whether it's a 3-wheeler, 4-wheeler, bus, 2-wheeler, all those prototypes we do. And basically, the product is visualized with engineering, and the customer get a very fast development from our side. And we test them also. We have several methods to achieve this. We are using low volume production techniques to create such a fast development cycles. We also have developed gearboxes for a 2 kilowatt motor. This is for a Denmark customer. If you have seen a trailing arm, instead of tooling it or doing a lot of work, we did laser cut press bend and test the suspension from the supplier first. And then the suspension and the entire system is working well. Then we have gone for a tooling of that trailing arm. So our methods are mostly made for quick prototyping and do the engineering through practical level. But however, once it is done, there is a process which Amitabh sir is saying that when you are very confident about product, you have to go through all the reliability studies. We have to do the BAW tooling analysis and then go for heavy investment. So Advantage works in the 0 to 1 concept. I will.
So we are basically an industrial prototyping company and working with customers for their product development. Since we work extensively with automotive, so this is the right platform for us to present our capabilities. So just to introduce the team behind this. So this is me, Prasanna, and my partner, Senthil. We both spent around 25 years in the industry, and then we started this company in 2016. It's around 6 years over now. We both come from manufacturing background. I worked in precision engineering in Tata Group for 15 years, and then moved to software in Wipro. And Senthil spent in Tata Group for around 25 years. So we both come from new product development background. So extensively worked in a lot of products in the initial years in 90s and early 2000s. And then we started this. So we have a factory in Hosur and around 4,000 square feet factory. And we started with a humble background in 2016. And now we have around 400 plus customers. And we have been working extensively in automotive industry. So just to give a snapshot about with whom we are working, probably you can just see this. We work with IC engine, IC engine and electrical vehicle both. And we have done a lot of projects for Harita and TVS Group, and we have been working with Simple Energy and all
new EV startups as well. And not only just OEMs, and also we work with tier 1, tier 2 suppliers of and design companies. Our offering with respect to that, maybe just to introduce the offerings. So if the customer is having a product, let's say, for example, if there is a two-wheeler available with any of our customers, we can do the scanning, 3D scanning, and we can convert those physical product to CAD models, and we can do DFM, and then we can do prototyping and other things. If they have a concept design, we can do design in mechanical perspective, not the overall automotive design. And if once the design is available, we can do the prototyping. We have India's largest 3D printing, SLA 3D printing machine with us, which is 800 mm size, which is more suitable for automotive, and we work mainly in the automotive space for that. And apart from these other technologies like FDM or MJF or SLS, any of the technology we are, all the technologies we are offering for our customers. So in case, if it is like once the concept development is being done for form fit validations, if they're looking for the functional aspect as well, we have this vacuum casting process, which is for batch production of all the products, whether it is for functional usage or testing or any other process where you want to launch a small quantity like 20 numbers, 50 numbers, 60 numbers, or maybe 100 numbers. This process is more suitable because once you go for before you go for bulk production, probably the best process to check the functional fitments and also the testing, and also for your AR certification, or maybe initial launch of some few vehicles in the market. So for everything, the suitable process is vacuum casting, because once you go for, let's say, for example, injection molding or any other molding process, then it is like a lot of investment to be done for those molding mold development. Here it is like a simple, which we can do quickly. So that's a background about that. That's a batch of 3D printers, what we have, industrial printer. So India's largest printer is the size, the maximum what we have in India is the 800 size machine. And we have that machine in our factory. So 800 by 800 by 550 is the size of the industrial printer, which is very big for the normal two-wheeler kind of products. Like example, luggage box, you would say that 715 or 800 mm will be there, which can be printed in one single print. You don't need to cut and paste and join, things like that. So if it is other parts like seat base and those things, where it can be done in 600, 450 mm size, which we have another printer also. So these are all the printers which are extensively used by our automotive customers. And I can show a few products maybe at the end of the presentation. So it's not just 3D printing. So obviously that has to be converted as a product. So 3D printed part needs a post-processing facility. So to convert that as a product which can be fitted, or maybe the form and fit which is required as per the requirement. So we have the complete post-processing facility in our factory, which is a painting and post-processing and everything. So we also have a vacuum casting process, as I mentioned, for any of your functional part validation. So which is like example, whether it could be a few numbers of the functional parts to test those full vehicle, or maybe initial launch, like maybe 50 numbers, 100 numbers, like that. So for all these processes, this is the best suitable technology, and it is extensively used by all the OEMs and tier 1, tier 2 suppliers. So we have that facility now, and we can do any complex products, like as I've shown you here, the topmost one, which is having orange color. So like example, this is a nylon glass fill 30% product, which is in the gray color. And then the over molding was done. So this rubber, this orange color is rubber. So these both are homogeneously integrated. It is done in over molding process. So this gray product was initially done. Then subsequently, it is being kept in the other mold to pour that rubber as well. So that's a kind of over molding which can be done. And sometimes metal inserts, or maybe metal to plastic, any combination, or plastic to plastic, or maybe overlapping of plastic rubber, all this can be done. We have done hundreds of thousands of projects for that. So we also have full-fledged post-processing and painting facility in our factory, so which can ensure that the product is properly tested, fitted, and then painted to give the aesthetic look as well. So this is pretty important for any prototyping company to have these processes in-house. And otherwise, the product requirement is not 100% fulfilled, which we have experienced it for so many years. So that's a post-processing facility. And in the vacuum casting, our silicon molding, what we call, we have multiple material compatibility, like whether it is ABS or PP or nylon, glass field 30%, or rubber, or a PC ABS combination, transparent, opaque. Any combination can be done in vacuum casting and 3D printing. So that's a quick background. So I'm just cutting short few things, and why you should choose next-gen 3D Tech, because we have end-to-end offering from design to bulk production, and any of your new product development needs being fulfilled by us. And we both worked with many companies and in this new product development itself for so many years. So we understand the complexity and the phases in new product development, and we can guide the customer also that what would be the manufacturing process to choose at what point of time. So in new product development, sometimes you may need only one number, but the exact 3D printing may not be suitable because you may need that one component to be assembled and tested and things like that. So we understand those complexities as well. So which stage you are in, we can suggest the best manufacturing process for that. And since we have been handling so many complex projects, complex products, and launch as well in many cases, we understand the need, and we can handle those products and suggest the design changes required to suit the manufacturing process or to suit the functional requirements, whether it is 2 parts to be assembled or maybe like that. So that way we can support our customers, and we have been doing it for so many years. That's why we have not come from 3D printing industries, or maybe traditionally how these my competitors are working. We have come from corporate, just jumped into this and started this, so we could achieve from one customer initially, and then we have reached around 400 plus customers as of now. So since we have this making the 3D printing a technology to make the product which with good surface finish and painting like that, we can handle any of these product requirements, and we build the team also accordingly. So that's the kind of quick background about us. So maybe I'll show you a few the products as well, so if time permits.
Yeah, so thanks, Prasanna. Maybe what you can do is because you are part of our CXO group, if I'm not wrong, so maybe you can click some pictures, and maybe comment like, okay, this is our product capabilities, because that can be documented then. Although we will
actually some of the places, sorry to interrupt, some of the places we have signed NDA, so we cannot show the picture. I mean, which
no
in
problem.
The common. So maybe I can just show you that. Okay, this is a seed base which we've developed for the people who are available in this. So this is full-fledged seed base what we developed, which is maybe 60 numbers we've launched given recently for recently launched EV. This is seed base and foam, and this cover everything we have first done by us, and also the luggage box. You can see this luggage box as well. So since we and also we have done many other projects as well, like what I have shown that. This is one of the product which has that rubber in this, and this is the nylon glass fill 30% product. So like this, we have done so many projects. There's another project like that. This is also with rubber and this wall molding. So there are hundreds of projects. Maybe this is one example which we have done. This rubber hand grip with 3D printed part inside. This is wall molding. This. So like this, hundreds of projects. So maybe based on the requirements, maybe any of your requirements, we can discuss that, and we can suggest the right process and right tooling which is required. So let me know if you have any questions. if required, we can bring those parts and show the demo as well if required.
Sure. And Prasanna, on that note, because we have shifted our facility, I think you might not be aware, but we have shifted our facility to Narsapura in it's a large factory.
Okay.
And we are now building a showcase for all our members to keep their parts. So maybe any component which your company is not basically worried about IT, maybe you can So if maybe you can make some demo units and keep it with us. And all of the members, because there are multiple members that are developing vehicles, which are again asking for connects to develop their plastic panels and low volume. Plenty of, I would say, opportunities for companies like yours. And you are also one of the members. So basically, we'll invite you to also plan something in that direction so that your capabilities and your company process can also be stationed. So again, an invite to all of you who are into component systems. We are now earmarking a dedicated, I would say, display area in our larger space where we will have all your products to be stationed. And when you are presenting, and in case somebody is interested, they can quickly have a look at the capabilities. And in case there are other battery pack manufacturers which like the batteries to be stationed, we already have many members which have sent their samples, free samples, and we have secured them, and we share that when whenever there is a very intense interest. So thanks, Prasanna. It was great to have your presentation. And exploring all the synergies. We can ensure that our teammates, our BD team, our engineering team is enabling the connects, ensuring that all of you who are interested to explore synergies can be effective. Next month, we are trying our best to conduct our monthly member meetup in person, that all of you can also network one-on-one. And fingers crossed, if the corona situation does not create the issue, then we will be meeting in person this time in monthly member meetup number 4 in the month of March. So have a great evening, all of you. Take care, and thanks for participating today.